we're looking at the massive paradox behind Iran's reopened financial markets. 73.5%. That's the IMF's point-to-point inflation rate right now, and it's literally crushing everyday consumers. So the government reopens the stock market claiming normalization, but actually, the broader economy is rapidly shrinking. Get this, thanks to past privatization, a whopping 50 million Iranians actually hold shares in this volatile market. But here's the wild part. Out of those 50 million, only a tiny fraction are actively trading. The reality is, people are just cashing out. They desperately need the money to pay their daily bills. So they take that cash and dump it straight into safer bets, gold, US dollars, and real estate. Which really begs the question, if the market is stabilizing, why are everyday grocery bills still skyrocketing? Well, it boils down to four main drivers that are actively fueling this relentless countrywide inflation crisis. First up, the US blockade has completely wrecked imports. Now consumer demand is way higher than supply. Second, direct military attacks have severely damaged key industries. We're talking major hits to steel and petrochemicals. And that damage directly drives up the baseline costs for everyday needs, like housing and food packaging. Finally, the sheer fear of tomorrow's prices causes immediate panic buying, completely straining the supply chain. It's grim. The IMF forecasts a massive 6.1% economic contraction for this year alone. But look at the timeline. Iran has actually survived severe negative economic growth periods like this before. As Professor Fazanagan points out, the economy survives, sure, but everyday citizens suffer at much lower welfare levels. There is some hope, though. The IMF predicts a potential return to positive economic growth by 2027. But that recovery absolutely depends on choosing diplomacy over worsening conflicts with Israel and the US. So, we're left wondering, will diplomacy win out? Or will this economic struggle ignite the next internal conflict?